Hi, I'm Jimmy. In this video, we're looking at Apple stock, ticker symbol AAPL. So in this video, we're going to look at the basics of Apple's business. Then we're going to look at update on their most recent earnings numbers. And then finally, we're going to try to come up with the fair value of Apple stock using discounted free cash flow, ultimately trying to answer the question, do we buy Apple stock? Now, I personally own shares of Apple, so I'm also going to try to answer the question, if I don't want to buy it, should I sell it? Okay, that being said, before we jump into that, let me tell you real quick about an investing platform that we're building. So we've got our private investing community hosted over on Discord. On Discord, we got a whole bunch of different investing channels where we all talk, share ideas, do some research projects together, and ultimately try to get better as a community at investing. We also do a couple investing live streams, private investing live streams every week. We do a valuation live stream. We do a portfolio live stream where we talk about my portfolio. We build the different portfolios. Plus, we do a research live stream where we try to analyze companies together and go through the process together so we could all get better at it. Okay, now let me tell you about the website that we're building. So we already built the beta version of our discounted cash flow calculator. And the idea is that we would have a website that has a bunch of different valuation methods. So it could be, how do you value banks? How do you value a large cap company? How do you value a real estate company? How do you value a company with no growth or negative free cash flow or negative profits? There's different ways to value all different types of companies. So that's where the website's trying to go. For now, we've already got the beta version of the DCF calculator up there. We're just going to keep adding from there. Now, if you'd like to sign up to get access to our investing community as well as the website, I will leave a link in the description below. But for now, let's jump over to the basics of Apple's business. So traditionally, Apple has their business segments broken into two primary categories, services and products. Services represents about 20% of total revenue. Products represent the other 80%. But I actually think it makes more sense to look a little bit closer at each of them. So we could see that the iPhone represents about half of revenue, 52%. Now, this is a good number considering just a few years ago, Apple's revenue was generated 65% of it, I believe in 2013, 2014, 65% of total revenue was from the iPhone. The fact that that is being spread out more, I think, is a positive sign. Wearables are up to 11%. Just a few years ago, that was much, much smaller, but that is things like, by the way, that's things like the Apple Watch. That group growing is a very good sign. The Mac, about 10% of revenue. Again, that was smaller than I expected. This is one of their oldest legacy products, the Mac computers, and that only represents about 10% of revenue. Then finally, they have the iPad. We're going to come back to this one in a second, but again, we can see it represents about 7% of total revenue. So now let's look a little bit closer at each of the numbers. So when we jump over to the iPhone history, well, we can see that revenue going back to 2012, broadly speaking, the iPhone revenue has climbed higher. Now, 2021 was a particularly unusual year because in 2021, we can see there was a big jump from 2020 to 2021, but there were two sort of unusual situations there. First, all the big spikes we see in Apple's numbers came from new iPhone releases, which is logical. But in 2021, well, that was a little bit different because the iPhone 12 was launched in October of 2020. The iPhone 13 came out in September of 2021. Now that's important because Apple's fiscal year, their year ends the end of September. So the October launch in 2020 actually counted towards their 2021 numbers. So all of iPhone 12 is in 2021 numbers. Then I believe it's just the first week or so of the iPhone 13 are also in 2021 numbers. Now, that doesn't sound like a lot because it's just a week, but the first week for Apple products tends to be big, big weeks because tons of their products are coming off of pre-orders. So that makes the 2021 numbers look even better. Okay, now we'll jump over to the wearables segment. By the way, all these numbers are in billions of dollars. I locked in this scale to be the same scale as it was with the iPhone so we can see how the numbers did compared to their largest segment. Well, with the wearables segment, that includes things like the Apple Watch, the AirPods, even Apple TVs in that segment. And we can see that there has been some growth. They're up to about $40 billion. And overall, that segment seems to be growing fairly nicely. Then when we jump over to the Apple Mac, well, there is some growth. The growth is not as good as it was for the wearables segment, but broadly speaking, it's also up to about $40 billion, and there's some growth. Then we have their iPad segment, or their iPad product. And their iPad product, I actually think, is the biggest question mark of all their products. We can see they put up about 29, maybe $30 billion in revenue in fiscal year 2022. But that's about the same as it was back in 2012. The numbers really haven't shifted. Yes, in the past couple of years, we have seen a little bit of a ramp up as they came out with new iPads, things like the iPad Pro, different product lines like that. But broadly speaking, this is one of their only products that hasn't sort of trended sideways for a long time. So it'll be interesting to see where the company develops the iPad from here. Then we jump over to their services business, and this one's grown quite nicely. We can see that revenue is nearly up to $80 billion on an annual basis. This segment includes revenue from things like advertising or Apple Care. They have a cloud services division. This is in there. They have digital content, particularly coming out of the App Store. That is included in this group as well. Payment services, the Apple credit card, Apple Pay, any revenue that they generate in pretty much any of those categories fall into this part of their business. And overall, we can see that the growth has been quite good over the past few years. And this is exactly in line with what Apple has said in recent years that they are trying to grow. They have explicitly stated they are trying to increase their services revenue. So from a performance standpoint, I think they've done a fairly good job. Now, when we look at all of their revenue combined for each of the products, this, by the way, is just a duplication of each of the individual charts we could see. Well, we can see that overall, outside of the iPad, revenue has been doing fairly good for all of the different products, and there's no reason to think that won't continue to happen. One of the most important reasons why I have some confidence that that is likely to continue is that the company is spending a ton of money on research and development. In fact, this is a chart going all the way back to 2009, and we can see since 2009, they have quickly ramped up how much money they are spending to make better products, make brand new products, and make their current products even better. As long as they continue to do that, I think that it makes a ton of sense to bet on a company that is dropping $27.5 billion on research and development. And by the way, they already have a fairly loyal following. Okay, now let's jump over to their earnings per share. So these are actual earnings per share versus estimated earnings per share going over the past 5 quarters. We can see their fourth quarter numbers. They beat estimates by about 3 cents. They came out with $1.29. They were expected to do $1.26. But we can see that estimates in the first quarter of 2023 and the first quarter of last year had huge numbers compared to the rest of the years. And that goes back to what I had pointed out, that their fourth quarter actually ends at the end of September, which means their first quarter is the end of the calendar year, which is important because, like most retail companies, the holiday season, Christmas, December, that time period is when the most sales happen for most retail companies. Apple's no different. The only difference for Apple is Christmas, the holidays, December happens in their first quarter, which is why their first quarter numbers are historically so much better than their other numbers. I also think it's interesting to note that in the fourth quarter of 2021, Apple met analyst estimates. They came out with $1.24. They were expected to come out with $1.24. Well, every quarter since then, going right up to the fourth quarter of 2022, the analyst estimates have been lower what the actual numbers were. So this is a good sign for investors. Now we'll see how their first quarter of 2023 actually shakes out. There are a few hesitations with the first quarter of 2023 because Apple's run into some manufacturing issues, particularly in China. They've had some trouble producing their products, producing the iPhone in particular, iPhone Pro in particular. And because of that, well, there has been many analysts are either downgrading or expected to downgrade how many total sales they're going to have for the iPhone 14, which will be in the fiscal year 2023. So we're going to have to see how that shakes out. Estimates are that what is lost in the first quarter will be pushed off to the second quarter, so it shouldn't hurt the total annual numbers, but it'll be a matter of timing. I just want to bring that out because that's going to be an important point. Might be a good opportunity from a value perspective if they miss in the first quarter of 2023. As a value investor, that would be ideal. That being said, let's look at some broader numbers to see what the fair value for Apple stock could be. So when we look at the revenue going back to 2012, we can see, broadly speaking, the trend has been higher with the unusual jump in 2021. Now, I mentioned that is partially double dipping on the 2 different iPhone releases, but overall, all their segments did fairly well. iPhones did better, sure, for multiple reasons, but they also had better sales growth in services. That was much better than expected. Macs showed pretty good sales growth. So overall revenue did fairly well. Now, when we click over to earnings per share, and I actually kept the chart colors the same because I wanted to show how similar those chart looks. If I don't point out that that's an earnings per share shift, sure, it looks like the jump is a little bit bigger, and that's partially due to buybacks. We'll come back to that in a second. But overall, earnings per share has continued to do quite well. And analysts, by the way, analysts are the ones in green. The green bars are analyst estimates. Analysts are expecting for those numbers to continue. Then when we jump over to free cash flow, well, overall, again, it looks like the numbers, these are all fairly standard numbers. Growth is there. They're doing fairly well. Things have ramped up recently. The story's getting fairly repetitive from a Apple's performance perspective. Sure, free cash flow will be a bit more volatile, but still, broadly speaking, the trends seem to be intact. It seem to be intact no matter which numbers we look at. Then we have an interesting chart, and we can get these right off of annual reports, and that is their diluted weighted average shares outstanding. By the way, all their annual reports show you how many shares they outstanding from a diluted and not diluted perspective. Diluted is, let's imagine that all the company's stock options that let's say management has a whole bunch of stock options available for them. Diluted shares assumes that they all turn in their shares, they all turn in their stock options and they get shares. Well, with all those shares out there, how many shares do they have outstanding now? That's the difference between regular shares outstanding, diluted shares. Generally, I think diluted shares are a better number to use. But the more interesting part here is look at the numbers. This, by the way, this chart goes all the way back to the 80s, and look at the numbers since 2012. Shares outstanding have fallen by about $10 billion, but 10 billion shares, which is an obscene amount of money, no matter what average price we assume that they bought it back at. That being said, let's jump over to look at the fair value for Apple stock using discounted free cash flow. So this is actually the discounted cash flow calculator that I mentioned before, and we can see we get a fair value for Apple stock of about $114 per share. This is using a 9% required rate of return. By the way, if you're curious, I'm using a 9% required rate of return because it's a premium over AAA corporate bonds. If interest rates continue to go upwards, we're going to increase our required rate of return based on where AAA corporate bonds are. But overall, that's about where we're at now, which isn't too far off of the long-term average of the S&P 500, so I'm okay with it. But even using that number, we end up with a fair value of just $114 per share. Now, previously, when the discount rate was a little bit lower, before interest rates started going up, I actually was getting a fair value of about $141 per share. I jumped in and bought my shares right around then. This stock is up a little bit since I bought my shares, so overall I'm fairly happy with the purchase. I don't know if it'll get all the way down to 114, but for now, it seems like Apple stock is a bit overvalued, so I will not be adding any additional shares to my personal investment portfolio. Now, one of the reasons that these numbers could be considered a bit more conservative is that when we look at analyst estimates, well, analyst estimates, broadly speaking, aren't showing a ton of growth. One of the reasons for that is that we are right now in some macroeconomic headwinds, let's call it. Because of those troubles, well, Apple has said, like many companies, that they're expecting near-term growth to be a bit slower. So this is going to include some slower growth numbers. Now, they do have a ton of cash. Right now, we can see they get almost $170 billion in cash. Overall, this is a very good thing, especially for a company that continues to do buybacks. Now, I assume that they will continue to issue more buybacks. And by the way, discounted cash flow happens before stock buybacks and before stock dividends. But it happens before stock buybacks because that's one of the things that they do with the cash that they earn. So they bring in the $160 billion, they bring in their free cash flow, and then what do they spend it on? Do they pay it out as dividends? Some. They also buy back some shares, they reinvest in new products, they do a whole bunch of things with it. But that cash is going to be very valuable for them going forward. So overall, it seems that Apple stock, although a bit overvalued at this price, I could easily make the case that these numbers are a bit conservative. Now, for me, I don't mind being conservative, hence the reason I won't be adding to my Apple position at this point. Now, if you'd like to sign up to get access to this website, I will leave a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. And let me know in the comments below if you plan on buying Apple. I'm curious if you bought it, if you plan on buying it, if you own it, let me know. I'm curious. Thank you, and I'll see you in the next video.